Welcome to the Real Money Show. The number 18778 silver and the website guildhallwealth.com. Much to the chagrin of all of the staff at Guildhall, I got my voice back, guys.
It's back.
I got it back. So
welcome back, Jeremy.
Now we can rant away, Jerry. Rant away. While you're listening to the show, if you want to learn about holding physical gold and physical silver directly, go to guildhallpreciousmetals.com and pick up some metals there. Prices are great. Quick service. Get your physical precious metals right from the sitting on the couch or in the car. You can book an order. If you want to learn about holding physical gold and silver in your registered account, I'll just remind everyone that gold is up over 600% in the last 20 years, and we are just getting started. You'll hear some crazy numbers, but you're going to understand the rationalizations of why gold could go crazy high from here. Yes, we've seen some good moves, but this is only just getting started, and silver has a lot of catch up to do. So, you want to improve your outlook for your retirement portfolio? Consider having some gold and silver and learning more about this market. To do that, go to guildhallwealth.com, and of course, call us direct at 18778-SILVER. That's 18778-SILVER. My name is Jeremy Wiseman. I'm joined by Jerry Correia. Jerry, this has been another crazy week in the market. We have so much to talk about. We don't even really know where to start. Why don't we start with the pullback that we saw, the joke of a pullback we saw in the gold market?
Yeah, let's get into that. We all want to know what happened. Silver pulled back from, we touched 35 US. Now we're down and around the 33 level. We did hit a low earlier this week of 33.15. And gold held support at my Fibonacci support level of 27.16, which I tweeted about earlier this week. Heavy support level there, but definitely we're seeing a reversal in this market, and the uptrend continues. The silver to gold ratio is back to 81 to 1. It's a great time to buy silver. This is your time to take advantage because the loonie, it's continuing its descent, looking to hit 139.50 soon, which was the August 5th low, and it's trending lower, Jeremy.
Jerry, let's talk a little bit about the ratio. We had two posts that we put out on X about the ratio. One was how the ratio, I think, through history, this post, you guys got to go check us out on X. It shows where the gold to silver ratio has been throughout history, and it goes by 100-year periods. And what we have right now is absolutely out of control distortion on what the ratio is. And then I reposted it again. Someone put up another version of it.
Yeah, a refined version. The clown world that we're in today.
Yeah, so Jerry, you've got it pulled up.
Yeah.
What's tell us some of just give us a couple ages throughout the history and where the ratio was, just to demonstrate, highlight, underline what a clown show we are living in and what an opportunity of a historic lifetime we might have here in silver.
That's why we bring it up, because this is a time-tested, centuries-old ratio that we use to understand that this is the buying opportunity. This is the opportunity of a lifetime. Gold and silver ratio goes throughout history, all the way back to 3200 BC, a 1 to 3 ratio. You need 3 ounces of silver to get 1 ounce of gold. Up to 40 BC, when Caesar was reigning. 1280 in England was 11 to 1. The average, Jeremy, going back centuries, have been, as it was around 1 to 12 to 1 ratio. So I need 12 ounces of silver to get 1 ounce of gold. And today we're at about 81 to 1. And this is ridiculous. This is a total clown show, knowing how important, how crucial, how vital silver is. You cannot have civilization without silver. How can we be at 81 to 1?
Okay, now I'm just going to try to be calm and say why that number is so absolutely 100% ridiculous. Now, I wouldn't put my life savings based on a ratio, but just understand that in 1980, when silver went to $50, there was 8 billion ounces of silver above ground. There was 150 million people on the planet, something like that. Today, we have less than 2 billion ounces above ground, 350 million people, And the technologies using silver are coming fast and furious. And that's not even talking about future technologies. And that's not even talking about that we don't use it as part of our currency day to day. And that the investing public, according to Rick Rule, who is a much smarter person than me, I'm not that smart at all. Like, this guy's brilliant. I mean, this guy's been in the market and much richer than everybody. And he says the investing public is half of 1%.
Yeah.
It's like Argyle Diamonds.
Yeah.
Half of 1%. So that is a clown show in terms of the ratio of gold to silver. But, Jerry, just want to get back to the pullback in gold, because what did it take for them to push the price of gold down? And do they actually have the physical gold to get that gold down?
Well, the market was definitely driven by paper trading on Wednesday. That's when the market started the downtrend, when the reversal happened. A few technical sell signals were generated that Wednesday. The silver market traded 462 million paper ounces that day. The COMEX had 8 deliveries and the LBMA had 1,800 deliveries. This was a smash down during the BRICS summit. This was obviously by design. Over the last week, and Nick and I had that interview, did the show last week, and we talked about the banks and the losses and the unrealized losses that the banks are going. The banks are under pressure. There's a huge amount of derivatives and short selling that the banks are doing, and they had to cover.
Okay. How many ounces did they have to use to short?
462 million paper ounces.
462 million. And now look, we know that the regulators and the banks, the people who work at the banks, just so everybody understands this, the people who work at the banks go and work for the regulators. Right?
That's usually
you
the
get
case.
JP Morgan guys who did their time at JP Morgan go work at the regulators. It's like what was that movie with Leonardo DiCaprio, The Departed?
Yep.
It's like The Departed. They go and put their own guys into the regulators, and they just say, how many ounces of gold do you have? Oh, no, we've got 400 million ounces to push the market down. Okay, in what vault?
Yeah,
actually, I don't care. You guys have that amount of ounces? Great to hear. You're talking about shorting a physical market with NFTs.
Yep.
They might as well be NFTs. It's meta. It doesn't exist. Welcome to the world you live in.
Yeah.
More clown show. But they cannot stop the marching forward of this market. They didn't stop the BRICS. The market bounced back. Jerry, you're itching to tell me to shut up and say something. Go ahead.
No, this doesn't make any sense. With shorting, you create 462 million ounces. The short positions that these banks represent nearly 708 million ounces of silver, equivalent to almost an entire year's of global production coming out from mines and mining companies that are struggling right now. Despite strong industrial demand, the technological advances that we're seeing from electric vehicles, military, aerospace, you name it, as we advance, we need more silver. It is crucial. But this uptrend continues. Despite the smash down, despite their little escape strategy, the uptrend continues to defy, despite we're seeing higher rates, higher yield, and some context from Forex.com today. The yields in the dollar have been on a tear over the past 10 days, yet despite this, gold and silver have been increasingly correlated with these variables, despite being their traditional nemesis. That technical sell signal was triggered on Wednesday. However, the momentum in metals quickly reversed that alert. And further from Forex.com, they find remarkable how gold and silver have performed in this environment of higher rates and higher USD. But it also suggests something other than rates and FX fluctuations that are driving precious metals. The safe haven appeal, the higher expected inflation, Paul Tudor Jones, ballooning fiscal deficits, circumventing Russian sanctions, all of these things happening. Russia was potentially, there was a potential threat of more sanctions on the palladium market. So palladium spiked about 10% the other day. This is continuing. The geopolitical unrest and the geopolitical uncertainties will continue. So Forex.com, the mainstream's paying attention. This is beyond technical and charts. This is fundamental stuff happening, and it all leads to gold, and it all leads to this meeting that happened at the summit this week.
Yeah, and we'll get into the summit this week. I also want to get into revaluation in the physical gold market. The number is 18778 silver, and the website is guildhallwealth.com. With Guildhall, we have this vehicle for registered accounts where what you will get as a client is outright owned physical gold and silver. You own it directly, stored in an allocated, segregated account. You're going to get the serial numbers of your product, inventory reports, and it's going to be held in a vault facility, fully secure, fully insured, backed by Lloyd's of London, a vault facility outside the banking system, but still within your registered account. You know, some people are worried about the great taking and will they steal all my goods, When you have actual physical gold that needs an actual tank and someone physically to try to take it from you is much, much different than stealing the paper. 40% of your income you give to the government. 13% you give to the government. Inflation is stealing another 15%. I mean, the government would have you believe we're on target at 2%. But you go grocery shopping. You've got insurance you're paying. You've got kids' activities that you're paying for. You know prices are way up.
And the Bank of Canada just did their 50-point jumbo cut, which only weakens our currency. Paul calls that another inflationary tax.
So the theft has already occurred and is continuing to occur. And as Greenspan once said, ironically, the only thing to protect you against inflation is actual physical gold. So if you're going to own it, own it. Own the real thing. Know that you can go to the vault and personally hold it in your hand. If you can't hold it, you don't own it. We're going to show you how to do that. Just use the number 18778 silver, the website guildhallwealth.com. That's to get physical gold and silver in your possession, in your registered account like an RSP, TFSA. Maybe you're looking to try to afford a home. And as, you know, one thing I would like to suggest is to help people understand, Jerry, that it's not about where the price of gold goes. Gold is not a price. Gold is a measuring tool. It's measured in ounces. How many ounces should it take to buy a home in Canada? How many ounces of gold should it take to buy the Dow Jones Index? How many ounces of gold should it take to buy a barrel of oil? You know how much a barrel of oil weighs, by the way? It's over 500 pounds for $80. You know what I'm saying? Like an ounce of gold, a 100-ounce bar of silver weighs 6.5 pounds. Okay. And that thing costs you $3,800 or something like that. US. So, you know, when people complain sometimes about, oh, it's a lot to store, you could try storing oil in your garage.
Try to do that when it went negative.
It's about a measuring tool. It's being worth your weight in salt. It's about understanding that there's $35 trillion in debt, and in 1980, the debt in the U.S. was $1 trillion, and gold revalued itself, not the government. It revalued itself to $850 an ounce. That's $850 to $1 trillion in debt. So it's about a measuring tool. So when we're talking about numbers, it's more about what those numbers represent in terms of how many ounces of gold to buy this, how many ounces of gold to buy that. So when we're talking about the gold-silver ratio, it's, well, how many ounces of silver should it take to buy an ounce of gold? And to have 80 ounces to buy an ounce of gold is absolutely clown world type of numbers. And we know that those numbers are gonna revise themselves down. 2011, we got to 35 to 1. 1980, we got to 1 to 1. There are those who think it could go the other way, like Bix Weir or Mike Maloney. He's a smart guy. He thinks it's going to go the other way. Who knows? Who knows? If we got to 35 to 1, believe me, you're looking at triple-digit silver. So let's talk about... So I just wanted to say it's about a measuring tool. It's measurement. And everyone can do this. So let's talk about revaluing. Again, the number 18778 silver, the website guildhallwealth.com to get some physical in your portfolio. Revaluing. Okay, let's take you back to 1971 and let's say that Nixon owes France $1 million that they borrowed for the Vietnam War. Okay. Gold is currently trading at $35 an ounce, and it is convertible. So if you owe France $1 million, they have the choice. I'll take $1 million bucks, or I'll take gold at $35 an ounce. That's 28,500 ounces of gold. That's virtually a ton.
Right.
32,000 ounces.
Yep.
That's virtually a ton of gold that they would owe them.
Because it's convertible.
Yes. Now, Nixon decided, for whatever reason, gun to his head, maybe he got a kickback, who knows? I'm going to cut the gold standard. I'm going to give control to the central banks. They get carte blanche on printing the money. It's our dollar, but it's your problem. You no longer get to convert. Okay? I'm going to take this from two angles. Remember, I am Nixon. I owe France $1 million. If I gave up the gold, I got to send them 28,000 ounces. Now, gold went to $850 by the end of the decade, then came back down and landed at $350. If I take $1 million and I divide it by a revalued gold from 35 to 350, guess how many ounces I would owe France?
How many?
2,857 ounces.
Easy to do. Easier, much easier.
But Jerry, there's not enough gold for a gold standard. You can't have a gold standard. There's not enough gold in the world.
That's the mainstream argument against the gold standard.
Well, I'll tell you what. Why don't we revalue it to 350 and I owe you 2,800 instead of 28,000?
Voila, solution.
Okay, now.
Yep.
France can't convert. So they take the $1 million in cash and they buy the gold at $35 an ounce. How about that? They buy themselves 28,571 ounces.
Very smart.
And guess what? The price of gold went to $850, but let's assume they didn't sell it at the top. Let's assume they sold it when it fell back to $350 an ounce. Guess how much money they have in their coffers at the end of the decade?
What's that?
$10 million, buddy.
No problem there.
So you don't think the central banks are as smart as Charles de Gaulle and understand the math on this?
It's the same scenario at play.
How do you pay off $35 trillion in debt? How do you pay off $100 trillion in unfunded liability? Other than revaluing gold up, I don't know. Play with the numbers.
Yeah, exactly.
Do I care? No, I don't care because my clients are going to make a ton of money on that revaluing. The central banks are all buying it, getting ready. They're reorganizing those deck chairs before the music stops. So what does Andy Schectman say? You jump in on this. I want to hear your thoughts.
Well, the topic of the revaluation is just swirling, and I think that topic began in 2000 and I believe it was 19, 18 when all of a sudden in the nighttime, the Bank of International Settlements reclassified gold to become tier 1 capital. And at that point, all of the gold pundits saw what was going on, including Andy Schectman. He was interviewed this week. He's obviously the president and owner of Miles Franklin Precious Metals. He stated that given the U.S. gold holding, which has not been audited in a very long time, already totals about 8,000 tons. By means of balancing assets and liabilities with the new price of gold, gold may have to be revalued to as high as $150,000 an ounce, greatly improving the balance sheet of the U.S. He also warned that this revaluation reset would also have the effect of destabilizing key aspects of the U.S. economy and could usher in simultaneous collapses over leveraged banks. Could that happen? We do know that derivatives are all over these banks. So we talked about debts, hundreds of trillions of global debt, $50 trillion in US debt soon, and plus quadrillions of toxic derivatives on the bank. Banks will go under, and that's what we're seeing, this huge trend of banks going under over the last 9 months so far in 2024. Big name banks. We're not just talking about regional banks. This is a major concern. And how do we do this? Well, we need a new structure, a new change of exchange. and the exchanges are being made right now, Jeremy. The BRICS summit just concluded, and Russia just unveiled a plan to create a BRICS precious metals exchange for the BRICS member countries, allegedly to alter the current world gold and silver and other precious metals pricing mechanisms. It's all about the price mechanism, Jeremy. The announcement comes on the back of BRICS leaders declaring support for increased exchange of the metals between the member countries this week. You know, this is what we saw last week when one of the mining giants of silver, Mexico, decided to nationalize one of its lithium mines. Moving in that direction, this is leading towards creating the exchange, not to complement the COMEX in any way or the CME, who's involved with the paper trading and the rigging of these prices. No, they want to unleash the gold and silver prices from this suppression because it's unjust. These are the countries, I'm talking about the East, China, Russia, Mexico even, they're involved in the mining of these very precious metals. New York and London, where we get this COMEX smashdowns almost every week and at 8:30 in the morning, these are two headquarters that do not mine 1 ounce of silver or gold. They don't have enough silver and gold to back up this supply. So there needs to be a change, and that's what we're seeing. It's a very exciting development that came out of this meeting. We all wanted to know what they were going to talk about. I'm sure Russia talked a little bit about, or a lot about, their silver reserve strategy, employing silver as a part of a country's reserves. I mean, we could talk about, huge buying of a particular stock. And we can they wheel out Buffett that's buying, for example, maybe some Tesla shares. Okay, that's one person and a major corporation buying a stock to bid it up. But this is Russia, an entire country getting into a very, very small, finite amount of silver. This is Silver Squeeze, a continuation, and this Silver Squeeze headline is going around the world, and the short squeeze is confirmed. And that's the exciting news, Jeremy, about this BRICS. And so I want to talk about Jim Rickards for a bit, but before I do, you need to give us a call, 1-877-8-SILVER, the website Guildhall, preciousmetals.com to order some silver maples. They're going on sale very soon. But talking about Jim Rickards, lawyer, investment banker, very smart guy. He's been
ex-CIA
as well. He's been long on gold, bullish on gold for a very, very long time. He previously forecasted that gold would reach $15,000 an ounce. Now he's raising that prediction to an even more optimistic figure. He says his latest forecast is that gold may actually exceed 27,000, and he provides the math on this, implying that this is a non-deflationary price of gold under a new gold standard. He explained that in a system in which dollars are freely exchangeable for gold at a fixed price, if that price of gold is too high, it would lead to investors selling freely. Conversely, if the price is too low, investors will line up to redeem. He highlighted that the U.S. M1 money supply is 17 trillion and assumed that maintaining confidence of the U.S. dollar would require a 40% gold backing. He argued that this percentage was the legal requirement for the U.S. Federal Reserve from 1913 to 1946. He then calculated that by applying the 40% ratio to the $17 trillion money supply would require the U.S. to hold $7.2 trillion worth of gold. I don't think we have that. According to the world...
I did the math on that, actually. If we went to something like... I'm surprised I got the math right here.
Oh, nice.
It was like if gold goes to something like 27,000. I guess that matches.
This is it.
I was doing the math on the last segment while you were talking. Yeah, if you go to 27,000, it comes out to like 7.5 trillion or something.
Yeah, that's right. So according to the World Gold Council, the U.S. has 8,000 tons of gold reserves, or 261 million troy ounces. That leads Rickards to the final step of his calculation. Applying that $7.2 trillion valuation of gold yields a gold price of $27,533 per ounce, he wrote. A price tag of $27,000 for 1 ounce of gold would imply a staggering upside of more than 1,000% relative to where the precious metal sits today.
Okay, but we have like a minute left. But how much did gold go up in the 70s?
In the 70s, gold went up approximately 1,400%.
So, in Canadian dollars, we're up like 600 in the last 20 years. To see another 1,000%, we're not far off those numbers from the 70s.
Exactly. And that's why we usually refer to the silver to gold ratio, because it's time tested. It's trusted. We don't have to rely on ticker and minute to minute charts. These are 50-year charts as Rickards uses, and the silver to gold ratio goes back centuries.
And it doesn't, in that case, look, it doesn't matter if you actually own it or not. If the dollar has power, if the dollar is valuable, all of the citizens are going to have the advantage of that powerful dollar. So, you know, if this isn't for you, that's okay. According to Rick Rule, it's not for 99.5% of the population.
Very
So
true.
it's okay if you can look at this and say, these guys are full of it. Every week they tell me it's going up and it doesn't. And it's like, well, actually, stealthily it has.
Yeah. Silver up about 43% on the year so far. Gold's up 32% and climbing.
But it's an insurance policy. I asked a client today, I said, what's your outlook? He said, I don't know, 4 or 5 years or whatnot. And I said, so do you foresee a time where you just won't have car insurance? Right? And basically he said, no, I always am going to need that. Exactly. You're always going to need some physical gold and silver in your portfolio. Now, the amount you have might change. You might have 40, 50, 60% right now. You might eventually sell off 2/3 or 3/4 and bring it all the way back down to 15%. But you'll probably always want to keep that asset. And there's a difference between owning assets and making investments, which have counterparty risk. Once you've made a lot of money, you can try to keep making more, and then you do your investments. But for most of us, Jerry, it's return of our capital.
100%.
We put money into an RSP. We got to beat inflation, right? We got to beat the income taxation when we exit. And if we really win, we can overcome the withholding tax. But we want to see what that translates to, by the way, is about 140% over a decade or
Over
two
a decade.
decades.
Yeah.
Depending on how long. It doesn't matter because you have to overcome the 30%, the 40% income tax, and then whatever the inflation rate is.
That's if income tax stays at 40%.
Oh, yeah, we could talk about that. So, yeah, that would be a good one. So, the point is that gold and silver have already done it. But all they've really done up to this point is actually keep up with the losing purchasing power of the dollar, but it hasn't caught up to the revaluation of where they're at when they're at their peak purchasing power.
Very true.
So you haven't missed anything. It's been great to see these first initial moves. This is like gold going from 35 to $100 between 1971 and 1973.
Very true.
Right? It's still got to go to 850, so you haven't missed anything. And we'll talk more about those ratios, and we'd like to teach people what to look for and what indicators to look for in terms of how to understand when it is a good time to consider lightening up in the market beyond personal reasons and anything like that. To get some physical gold and silver in your portfolio, give us a call. We'll show you how to do it. We'd love to help you open an account, help you with transfers, help you to get into the market. We're very service oriented here at Guildhall. To hold precious metals in your registered account, you give us a call at 1-877-8-SILVER, the website guildhallwealth.com. Jerry, I want to get to one of our absolute favorites, Jim Rogers. I did read his book, Hot Commodities, and learned a lot from it. Must have been like 10 years ago, and a lot about different cycles. But first, I just want to quickly throw out some headlines here that you passed to me during the break. Silver set for a major rally. James Turk predicts 50+ price in days or weeks. I have to say, James Turk is a very smart guy and wouldn't put his neck out like that unless he really knew something was going on. Paul Tudor Jones, we mentioned at the top of the show, billionaire investor. He is betting long on gold and Bitcoin as inflation shields. IMF cut growth outlook. Flags rising that there's global economic risks. We have, as the election looms, Treasury hedging costs climb. Lots of stuff going on in the Treasury market. We've got Druckenmiller, right? He's been shorting
U.S. Treasuries.
Shorting U.S. Treasuries. Geopolitical risk propelled gold to unprecedented peaks. Of course, it's not just one reason that pushes the price of gold, but that's one headline out there. Let's see. Oil markets navigate choppy waters as global conflicts of global conflicts and geopolitical change. That's a huge one. This one's a good one. Gold bull run expected to extend into 2025. Jerry, what do you make of that? And talk to us.
These are the trends, Jeremy. We just got to keep following them, and the trend is our friend. As long as you have headlines that support the fundamentals, these foundations that we talk about daily here at Guildhall and weekly on the Real Money Show, the foundations, the very pillars of why we do is dollar devaluation, inflation, supply and demand, and geopolitical risks. Everything is culminating at the same time. Four pistons rising and driving, and de-dollarization is happening. Just after the BRICS summit, the U.S. being left out of the summit responds. The U.S. State Department, Vedant Patel, came out. They wheeled him out, and he's warning the U.S. that the U.S. cannot allow an alternative to the SWIFT system and the U.S. dollar. They're contrasting, Jeremy. They're moving towards one direction, and the U.S. has to catch up. We have to follow these trends, and we try to follow them and provide this information as smoothly and quickly as possible to you, the listener.
Yeah, the BRICS basically came out and said, look, we're here. We're going to keep working at this. We believe that there should be an alternative to the dollar. We want a balanced and fair trade. That was essentially what they came up with. They said, we're going to keep working towards this. We don't necessarily want to replace the SWIFT system, but we need to have an alternative to the US dollar. Hence, the US comes out and says, look, we're going to compete against these guys. And I think they're going to come to a deal where fair is fair across the world if everyone wants to grow and be prosperous. Talk to us about Jim Rogers.
Stocks are too frothy for Jim Rogers over the last few months. A lot of euphoria. There's market euphoria at a very high level. Bubbles are about to burst, and it's getting too frothy. And complacency, Jeremy. The household allocation to stocks right now is at the highest since the dot-com bubble, and that bubble looks like it's going to be bursting. And it's too much stock euphoria, says Jim Rogers. Jim Rogers, the legendary investor, best-selling author, and co-founder of Quantum Fund. He joined Anthony Scaramucci from Wealthy on this week. There was a great interview. Highly recommend it. And the summary of the interview was the market euphoria, according to 60-year vet Jim Rogers, that the stock market euphoria is going to end, and that he's applying lessons from his 60 years of investing. As we're on the back of global markets, they're nearing all-time highs. He's basically saying that human behavior, it's driving bubbles, and why now may be the time to protect wealth and to consider precious metals. And he's providing advice to younger investors. Don't get lulled to sleep. Don't be complacent. The market looks great, but, just wanted to talk about the rate cuts. Nick Majuli from Ritz-Holt Wealth Management. The U.S. is on a rate cut cycle. Normally, the stock market holds up after a rate cut cycle.
Sure.
That's what we're seeing. But according to his analysis and the performance of the S&P 5 1 year after the cut cycle, from 1994 to 2020, found that the stock market started to implode from that point on, start to decrease 10 to 15% on average. And that goes back for, going decades. So things don't look too wise to be in the market right now, the stock market.
Michael Oliver said that if they're dropping rates in the United States, it's because there's massive problems underneath the surface, which means they're trying to drop rates, and you can guarantee they're also going to start the printing presses up. So dropping rates and printing money, printing currency, is a dead giveaway for more inflation. So it is a good time to be thinking about protecting and having some insurance. The number, 18778-SILVER, the website, guildhallwealth.com. If for whatever reason, you missed a show, you can always catch us on YouTube. We're also up on Rumble. Follow us on X. Always trying to repost some good things that are going on. But definitely check us out on YouTube and Rumble, and feel free to subscribe there. If you want to hold some physical gold and silver in your portfolio, you give us a call at 1-877-8-SILVER and we'll walk you through it. We'll do all the heavy lifting. We'll show you how to get involved. And even if it's just to understand the details, maybe you want to, find out more about what it might look like to change a portion of the portfolio. Jerry, so much going on in the market in precious metals, and the world is really looking, in my mind, to re-monetize. And I'm very excited about the future. I don't know if people are negative about the future, but I think that when you see the BRICS looking to back a currency with gold because they want fair trade amongst each other, and that's forcing the U.S. to eventually probably do the same.
Yeah.
There's even mention this week about getting rid of income tax altogether, which, look, there was no income tax in 1913. It all happened because of the Fed.
Right.
The Fed had to implement income tax because they were lending money to the United States Treasury, and the Treasury owed them back interest. So I don't care about all this talk about the fact that the Fed gives them, interest at the end of the year, which they don't, by the way. Neither does the Bank of Canada, because they're both broke. They're not making money. Who do you think pays for that deficit?
You.
Me. Exactly.
Jeremy, I think what we're seeing right now is definitely a re-monetization of the system. It's a very exciting time. What I'm excited about is just truth. Enough of the lies, enough of the shenanigans, the pulling the wool over our eyes. None of that. You're manipulating the market through these paper ounces being shorted. Just what personally gets under my skin is just, concluding the third quarter for 2024, some interesting information from Shadow Stats. As John Williams always puts out in his quarterly, the 2025 Social Security payment increased only 2.5% based on the headline CPI, the Consumer Price Index. It would have been, and it should have been actually 10.5%. People should have been getting more money. People who are relying on government assistance.
But why don't they? I mean, the stock market's been going so well. Haven't these pension funds been making a crap load of money? Like, if the stock market is up as much as they're telling us it is, and Jim Rogers is telling us that it's in a bubble, then why aren't the pensions paying out? Why the pensions aren't making money? How come half the people we speak to who are transferring money over to us are saying, I've been in the market for 10 years.
Yeah.
I'm not making anything.
Exactly. They're not keeping up.
And then they complain about the storage fee of 1% when they're paying out 2.5% plus to management fees, and they're making nothing.
Well, until you put together the precious metals report, you see how much they're up versus the small storage fee that you're actually outlaying, which is comparable, or actually a lot less than many mutual fund MERs. But anyways, I digress on that. He just talks about the gold and silver prices are trending where they should be, will be trending much higher, according to John Williams. A lot of exciting. There's only about 15 days of the election, which is going to be very positive for precious metals either way. Draining of petroleum reserves that has never been replenished since, just to keep the inflation down. For the midterm elections, they drained the petroleum reserves just to keep inflation down. All of the manipulation is coming to an end, Jeremy, and that's what excites me.
And I would also like to just remember and kind of enjoy the moment that gold is up over $700 this year, and silver's up. I think a year ago it was trading at $22 last October. Markets woken up, and it's running, and you have people like James Turk talking about $50 potentially within a year. You're seeing massive numbers coming out from Andy Schectman and Jim Rickards, and they're not the only one. I was listening to Rick Rule. I mentioned him earlier. He likes to say, I own gold because I'm scared it will go to $9,000 an ounce.
Yeah, what does the world look like then?
So it's a really good time for precious metals. You haven't missed anything when you start to look at the value of it against the debt, against the currencies. And if you want to hold some in the market, the number is 1-877-8-SILVER, the website, guildhallwealth.com. Jerry, 30 seconds, final comments.
Just got to bring back the mother of all probable cup and handles. This formation is a 45-year chart showing the blast off that's about to happen in precious metals. And our good friend Grady from Sweden, commodities TNA cycles. For silver, he says the biggest breakout level using the yearly time frame is about $32, $31 support. One of the most significant breakouts in history is now in the making. It is happening right now, so it begins. Do not miss this, from Grady from Sweden. And we echo that sentiment very much so. And we want to encourage you to get in touch. Go to the website, guildhallpreciousmetals.com, or give us a call. We want to talk to you. 1-877-8-SILVER. And check us out, guildhallwealth.com.
Absolutely. Get some physical gold in your portfolio and ride the bull, baby. Ride the bull. Thank you to all our listeners this week. It was great to be back. Great to talk to you. We can't wait to speak to you next week here on The Real Money Show on 640 Toronto.